If you've been following the crypto markets lately, you've probably felt your stomach drop a little bit. It has been a seriously rough start to the year for Bitcoin, with a pretty dramatic plunge that has left a lot of people just scratching their heads. So let's dive in and really unpack what's going on here. All right, first up, the big number that's got everyone talking. Bitcoin has crashed below $67,000. Now, this isn't just some random number. It's a huge psychological and technical line in the sand. The price hasn't been this low since last October, basically wiping out months of hard-won gains. And to really wrap your head around that drop, this means we're looking at a nearly 46% collapse from the all-time high that was set just a few months back. You remember that euphoria we saw after the election? Well, it's safe to say that has faded, and it faded fast. So that brings us to the million-dollar question, or I guess the $67,000 question. Why is this happening, and why now? Is this just crypto being crypto, another volatile dip? Or is there something more fundamental at play? Well, that's exactly what we're here to figure out. We're going to break this down like a doctor's visit for Bitcoin. First, we'll look at the symptoms, the plunge itself. Then we'll get the market's diagnosis. After that, we'll dig into the causes, which are like a perfect storm of headwinds. And we'll look at a really surprising complication involving corporate money. And finally, the prognosis. What could possibly turn this ship around? So, let's get right into it, starting with the symptoms. We've seen the price, we've seen the percentage drop, but believe me, the damage goes way deeper than that. To really feel the human cost of this, just look at this number. In the last 24 hours alone, a staggering $1.46 billion was liquidated from the market. That means over 305,000 individual traders got wiped out. Their positions just gone. This isn't just numbers on a screen. This is a massive, painful wealth clearing event. With this much financial carnage, you gotta ask the crucial question. Is this just another buy-the-dip opportunity that we've seen so many times before? Or are we watching a much bigger shift happen right before our eyes? Let's see what the experts are saying. And that brings us to the diagnosis. The consensus among a lot of analysts is pretty clear, and, well, it's not what the bulls want to hear. The on-chain data, the stuff that tracks what's actually happening on the Bitcoin blockchain, it confirms we're in a bear market. Firms like CryptoQuant are showing that demand from big institutions is actually reversing, regular spot demand is weak, and liquidity, it's tightening up. In fact, some analysts are saying these conditions look even worse than the downturn back in 2022. Nick Puckrin from Coin Bureau really puts it bluntly. He says Bitcoin is in full capitulation mode. The key phrase there is his distinction between a correction and a reset. See, a correction is temporary, it's short-term. A reset, that's a whole different animal. He says that usually takes months, not weeks, to play out. Okay, so if the diagnosis is a bear market, what caused it? Well, it's not just one single thing. Right now, Bitcoin is sailing directly into a perfect storm of external pressures, or what we call headwinds. We can really group these into three big buckets. First, you've got the broad economic and geopolitical risks. Second, there's the never-ending regulatory uncertainty, especially here in the US. And third, there's this new wild card that the market is calling the Warsh effect. Let's break each of these down. First up is macro risk. Despite that whole digital gold narrative, the truth is Bitcoin is still tied at the hip to risk assets, like tech stocks. As David Seymour points out, if the Nasdaq catches a cold, Bitcoin gets the flu, but worse. And with signs of a global economic slowdown, investors are pulling back from risk, and that absolutely hurts Bitcoin. Next up, regulatory gridlock. There were all these high hopes for clear crypto rules in the US, but progress on big bills like the Clarity Act has just stalled out. This uncertainty makes the big players, the institutions with the deep pockets, really hesitant to jump in. And you can see that in the pretty lackluster flows into Bitcoin ETFs this year. And finally, we have the Warsh effect. The nomination of Kevin Warsh to run the Federal Reserve has really got the markets on edge. See, Warsh is known for wanting the Fed to pull back, which could mean a return to something called quantitative tightening, or QT. Think of it like this. The Fed would be pulling money out of the system, which is the exact opposite of the easy money policies that have been a huge tailwind for assets like Bitcoin for years. Now, beyond all those outside pressures, there's a huge complication brewing from inside the crypto world itself. It's a risk that, honestly, isn't getting discussed nearly enough, but it is so critical to understanding the pressure on the market right now. I'm talking about something called digital asset treasuries, or DATs. This was the massive trend last year, right? Public companies like MicroStrategy started buying up Bitcoin and putting it on their balance sheets, using it as a reserve asset instead of just holding cash. And the scale of this is just immense. The top 100 public companies that did this are now collectively holding 1.13 million Bitcoin. That is a massive chunk of the total supply, all locked up in corporate bank accounts. But here's the problem. With this price crash, almost every single one of those companies is now underwater. That means their Bitcoin holdings are worth less than what they paid. In fact, the total paper loss across these companies is now over $19 billion. This creates a really dangerous feedback loop. As Justin Danathan points out, what happens if these companies get into financial trouble? They might be forced to sell their Bitcoin to raise cash. That kind of forced selling would dump a tidal wave of BTC onto an already weak market, and it could make this crash so much worse. It's like pouring gasoline on a fire. So, with all these negative forces swirling around, what's the prognosis? Is there any good news? What could possibly stop the bleeding and get this market turned around? Well, analysts are searching for a catalyst. According to experts like Vasily Shilov, the market needs to see something real, not just more hype. They're looking for three things in particular. Number one, clear signs that the Fed is going to start easing up on monetary policy again. Two, a serious rebound in money flowing into those Bitcoin ETFs. And three, actual, tangible progress on crypto regulation in the US. But Shilov also adds a pretty serious note of caution. He says this time feels different. Unlike past crypto winters, the overall economic environment is much tougher, geopolitical risks are way higher, and there's just less real, genuine buying to soak up all the selling. It really suggests the market has shifted into a much more defensive mode, that this isn't just a temporary blip. All of which leaves us with one final and pretty crucial question. The old stories that propped up Bitcoin, digital gold, the 4-year cycle, they all seem to be struggling right now. And these new risks, like the corporate treasury problem, are popping up. So you really have to ask yourself, has the game for Bitcoin fundamentally changed for good? That's what the entire market is going to be watching very closely in the months ahead.